We're here with another episode of CRE Insight. I have my wonderful friend Geraldine Serrano from STG Specialty Tax Group here with us, where we spotlight extraordinary people producing exceptional results. Welcome to the show, Geraldine.
Thank you for having me, Jamie. I am the director for Specialty Tax Group. I specialize in helping both residential and commercial real estate investors unlock tax savings through a tax strategy called cost segregation.
Okay, well, for those in the audience that don't know what cost segregation is, in simple man's English, what can you say about it?
So, a cost segregation study is a detailed engineering analysis of the building
Mm,
that identifies all the different components inside and outside of the building that can be on a faster depreciation schedule, which gives the real estate investor more depreciation up front that they can use to reduce their tax liability and improve their cash flow.
great. So typically the depreciation period is what? I think there are two options, right?
Yeah, so when you own residential investment properties, they're depreciated over 27 and a half years. Commercial buildings are depreciated over 39 years.
So if you take a commercial building and figure out the annual depreciation on a straight line basis, that's a really long time to take a little bit of expense at the same time. But what you're doing is you're pushing it forward, front loading the depreciation so they can have more um, tax savings. Am I right?
Yes. So the cost segregation study will identify the 5-year assets inside a building, which are items like carpet, cabinets, countertops. And outside the building, we'll find 15-year assets. And those are going to be your land improvements like asphalt and landscaping. So
Mhm.
you're right. It shows you how you can front load a significant amount of the depreciation or the total depreciation you'd get over a 27 and a half or 39-year period, and how you can front load a significant amount of that depreciation you can use today versus having it spread out over such a long time.
Great. Well, I think that's something that would really help a lot of investors. Now, the timing of your services, when would someone qualify for cost segregation studies, or when should they reach out to you?
So you asked me a couple of questions.
Okay.
So I get asked, when is the best time to do a cost segregation study? And
Mhm.
the answer is right after purchase. Because if you're planning to hold on to a property long term, eventually you're going to be doing improvements, repairs, and maintenance. A lot of times, real estate investors will purchase a property with the intent to do a lot of renovation immediately after purchase so that they can increase the rents. And
Okay.
so in that scenario, they would definitely want to do a cost segregation study right after they close on the building. Because in that scenario, they may want to do a two-part study
Mhm.
where they do a cost segregation study on the building right after purchase that will capture the accelerated depreciation on the building as is. And then depending on the renovation that they're doing, then they may want to do the second part of the study where it'll capture the accelerated depreciation on the improvements.
Mhm.
The first part of the study will help with something called partial asset dispositions. The IRS says you can write off the remaining basis of whatever you throw away.
Mhm.
So that's why the ideal time to do a cost segregation study is right after you close on the building. Also, but having said that, you can do a cost segregation study at any time. You don't have to do it right after you close on the building. If you've owned a building for 5, 10 years, you can still do a study and still receive a lot of benefit from doing a cost segregation study. What you want to think about though is if the property is a good candidate, is how far into the depreciation schedule you're into. So if you've owned a commercial building for 30 years, you only have 9 years left of depreciation. So you don't have a lot of depreciation left. Same
Mhm.
goes for a residential property. If you've owned an apartment building for 25 years, you only have 2.5 years left of depreciation. So there's not much depreciation left. So you wouldn't do a cost segregation study in those examples, but that's what you want to think about if you consider doing a study on a building you've owned for a certain amount of time.
Okay, so it sounds like cost segregation is most beneficial early on in the ownership kind of timeline or history. Is that right?
Yes, because then you get more accelerated depreciation up front because you wouldn't have taken as much if you do it farther down the road.
Okay. Well,
Also, depending on when you purchase the property, so for example, if a real estate investor purchased or newly constructed a building after September 27th, 2017, and before the end of 2022,
mhm,
they receive what's called 100% bonus depreciation.
mhm,
What that means is if that instead of waiting 5 or 15 years to get that accelerated depreciation, they have access to 100% of
mhm,
that accelerated depreciation that they can use immediately. And they can do a study now, even though it's 2024,
mhm,
because it's based off of when they closed on the building and
mhm.
when it was placed in service. So if anyone has purchased or newly constructed a building in that time frame, they still can get that 100% bonus depreciation. Also, if they purchased after, if they purchased a property or newly constructed a property last year, or a building, I should say, then they get 80%. The 100% bonus depreciation started to decrease by 20% last year.
Okay,
So 80% was still better than zero or 60% this year, right? So this
right.
year, if you purchased or newly constructed a building, you get 60%.
Okay.
Well, is it a good time to still buy before the end of this year? Absolutely, because next year it's going to drop to 40%. So I have a lot of real estate investors and their brokers and agents calling me, even though we're past the tax season,
Mhm.
because they want to make sure they close and the building is placed in service by the end of 2024 so that they can use the study to lower their tax liability when they file for 2024.
That's huge. That's huge. You know, cost segregation is such a specific niche of the whole world of accounting. How did you get into this?
So a friend of mine is the one that got me into the industry. When I asked him what he does for work, and he told me that he does cost segregation, I was interested in it because I've never heard of it.
Hmm.
And I don't know anyone else that I know that's heard of this tax strategy. And I got really interested in getting into this industry because when people meet me, they want to talk to me, especially the real estate investors that have never heard of it and
Hmm.
owe a lot in taxes. So I feel like when I meet people, they remember me, because I'm not just another banker or attorney or CPA, right? I'm
Right.
the one that they want to talk to because they don't know anyone else that can help them lower or completely eliminate what they owe in taxes. So it's great to be remembered when I meet somebody, when I go to a networking event or just when I'm out and about. I love helping people. I mean, the people that I work with, um, they are so happy after they receive the report and their CPA says they either owe zero in taxes or
Hmm.
they owe, very minimal.
Now, you must have a lot of stories, case studies of people that you've helped. Could you share maybe two or three of those?
Sure. So I'll share a few stories. So one, this happens all the time. I had a real estate investor who owns 12 rental properties in Denver, Colorado, and they're single family homes. So a couple years ago, he had shared how he owes over $100,000 in taxes. Um, he was telling a friend of his who is a client of mine. And so his friend told him to call me to see if
Mm.
I could help him, reduce how much he's going to owe, or hopefully eliminate what he owes. We identify all the components that can be depreciated faster, and told him that's how we would eliminate his tax liability. And I told him that the value proposition is this, because the fee was for to do a report on all 12 properties was $28,500. But I told him the value proposition is this: would you rather write a check to me and my company for 28.5 or write a check to the IRS for over $100,000? And
Mhm.
obviously, for him, it was a no-brainer to do the cost segregation studies on all 12 properties.
Right.
Also, what's a bonus is that fee is 100% tax deductible. So
Mm.
it was a win-win situation for him because he got to keep that money in his pocket. And like a lot of real estate investors, he bought more properties.
Right. That's huge. That's really huge. How did you know his 12 properties qualified for cost segregation?
So what we got, the information we get up front on properties that were acquired within the past year, they're not on a tax return,
Yeah.
and specifically a depreciation schedule, is we need minimal information to provide an estimate. So he provided me a closing statement and he did have appraisals on all the properties.
Hmm.
And from there, that's when we were able to do an estimate based on the property type and the purchase price. What we do, ideally, we want to get what they're going to choose as the basis for the building
Hmm.
and the land, right? When you buy property, you're buying two things,
Right.
unless it's condo or just land. You're buying the building and you're buying the land. So what you need to determine is how much of that purchase price goes to the building and to the land.
Hmm.
So if we don't get those numbers from the client up front,
Hmm.
we will a lot of times just look at what we think the building basis would be for that area. And then if the client and their CPA want us to change those numbers, we can, because our numbers have to match what they want to put on their tax return.
Hmm.
But so what we do is we look at the property and how much work would be involved to do the report. We
Hmm.
don't charge it. Our fee is not based off of how much we think they're going to save in taxes. We just charge a flat rate
Hmm.
based on how much time or how much work would be involved to do the report. And then we just also, based off of the type of property, we estimate how much we think we would be able to find in 5 and 15 year assets. And so from there, that's how we're able to create the estimate.
That's awesome. That's awesome. Do you have any examples where you've done that on commercial properties?
Yeah. So, you know, a lot of investors think all cost segregation firms and studies are the same, and that's not true. So I was referred to a hotel owner
Hmm.
that has a portfolio of hotels in California. And he had been using someone in the state of Washington for a long time,
Hmm.
but he let me bid on this hotel that him and his family acquired recently, or at that time.
Mm.
And he said, Geraldine, thank you for your bid, but I'm going to stick with my guy because I have a relationship with him, which I understood. Well,
Hmm.
2 weeks later, he contacted me and he thought that, asked me if I thought that my firm and I could get the numbers on the estimate that I provided him. And I said, absolutely. And I
Hmm.
said, why? And he said, for some reason, the guy he was using came up with very low results. So this hotel owner actually ended up paying twice for a
Oh,
study.
wow.
So my firm did do the study. Our numbers did match our estimate. And from then on, he only used my firm because we're consistent with the numbers that we come up with. And he obviously likes when we provide an estimate, we definitely our results typically match the numbers on the estimate or they're
Mhm.
higher. So that just goes to show not all cost segregation firms and their reports are the same. So and so that was done on a commercial building.
That,
So
That's awesome. That's amazing. So can you do cost segregation on residential, retail shopping centers, multifamily, industrial office across product types?
Yes, so you can do a cost segregation study on any residential or commercial properties. On the residential side, we can do a report on an ADU, a
Mm,
condo, or on a single family residence that you're only doing a short term or a long term rental on. Uh,
okay.
and, on the commercial end, in Oakland, I was referred to a real estate developer that created a commercial building out of shipping containers and created 30 office spaces. So that goes to show that you can do a cost segregation study literally on any residential or commercial property, even on the commercial side if it's mixed use, retail on the bottom, and then you have apartments on top. What the challenge people have is finding the firm that will, like, if they have a residential property, let's say a single family residence or a condo, a
Yeah.
residential condo, the challenge a lot of people have is finding the firm that will do a cost segregation study on a residential property. There is a lot of firms out there that will only do a study on commercial buildings, and the
Mhm.
purchase price has to be at least 10 million or above. And so
Okay.
a lot of real estate investors and or their CPAs will come to me and my firm because we'll do it on both residential and commercial.
And what is the minimum threshold of value, building value that you would consider doing this on?
Especially for me being here in California, definitely whether it's residential or commercial, I mean, the purchase price is typically above 1 million.
Yeah.
But, like I said earlier, you got to find the firm that will take on that project because you have the firms that where their threshold is the purchase price has to be above 10 million.
Got it. And what are some misconceptions people have about cost segregation or things that you would like to demystify? What do you want people to know about what you do?
So, what's interesting is I gave two in-person presentations in Nashville, Tennessee, within the past year. And
Mhm.
what was interesting is, I like to talk to the people in the audience, so I can get to know the audience and, and see if they've ever heard of cost segregation is, or if they've heard of cost segregation and what their knowledge is, or what their understanding of cost segregation. So what was interesting is they said in their area, they have firms that will charge based off of the tax savings, which was interesting to me. I've been in my industry for over 10 years and I haven't come across a firm that does that. But that was interesting that the firms in that area, that's how they charge based off of the tax savings. That's one. And then two, a lot of investors are told that you can only do it on commercial. That's a
Mhm.
misconception. If you go to the IRS's website and look at their audit technique guide for cost segregation, it'll talk about, that you could do the study on both residential and commercial. When people are being told that you have to have a certain amount of doors, that's not true. And then I also have CPAs telling their clients who are not familiar with cost segregation and they want to save face and they don't want to
Mhm.
say, well, we didn't bring it up. And then all these years you've had to pay taxes when this tax strategy could have worked for you, but I'm not familiar with it. So I'm not going to
Right.
recommend it. They'll tell their clients that you can't do it on a residential property, which, like I said a second ago, right, that you can.
Yeah.
So that's why there's a lot of misconceptions about cost segregation because of what's being told to all these real estate investors.
Right. So when you're working with a potential new client and the CPA is not as familiar with cost segregation, how do you get them warmed up to the idea?
The investor and or the CPA.
Both.
So I have these investors that will do their own research, right? They don't hear
Mhm.
about cost segregation through the CPA,
Right.
right? They're part of different real estate groups, or they're on different forums like Bigger Pockets, and
Mhm.
people are bringing up cost segregation. So they'll do their own research and get and understand, learn about cost segregation and how it works. And even though their CPA doesn't recommend it,
Mhm.
they'll still look into it. And so for me, I take a consultative approach. I don't like talking about cost segregation to a real estate investor unless I know that they can use it in their tax situation. And when they have a CPA that doesn't recommend it and their client doesn't feel like they understand what cost segregation is and they don't know if it could help them,
Mhm.
um, and they'll ask me to recommend a CPA because they want to switch CPAs, but also um, I'll offer to refer them to a CPA that I work with and that I know understands cost segregation and is willing to look at their tax return to see if they can use the results of a cost segregation study. And if that CPA I recommended says they can, then
Mhm.
a lot of times they're switching CPAs and they're doing the cost segregation study with me.
And then it's smoother sailing.
Right. A lot of CPAs, there's a lot for them to know, right?
Mhm.
And so if they only have the one client that's a real estate investor, so then they may not be as familiar with cost segregation, right? That's why when people start out with the one property and they're growing their portfolio, a
Mhm.
lot of times it's not that they don't like their CPA, they just their needs change.
Right.
That's why they need a different CPA, or they need, depending on how complicated their tax situation
Right.
gets, then that's when they may need a firm that fits their needs.
Yeah, that's so true because I myself, even for my own taxes, I had to switch CPAs because I wanted a CPA firm that understood real estate professionals and what we do and how we transact business and the different streams of income. So I had to make that change myself. So I do understand. I mean, it's just like the medical field, doctors. There are so many niche, specialists, and I think that's the same with CPAs as well.
I agree.
Yeah. So if you're onboarding a new client, what does that look like from start to finish? Like, just give us like a quick overview of what they need to provide you, maybe the time frames until you get the study done and they're rocking and rolling. How does that look?
Sure. So we have an initial phone call. There's a lot of firms that will just email back and forth. And, I don't mind doing that, but I like having a phone call so that I can understand, I can get more information about the property
Hmm.
that they're going to acquire or that they acquired or have owned for a certain amount of time. And so that I understand more about them and this property. And the reason being is like, so for example, if I know if they've acquired the property and they're going to turn around and sell it
Hmm.
within a year, I'm not going to recommend a cost segregation
Hmm.
study, right? Two, if I know that they're going to do a lot of renovation, right? Then that's when I would talk to them about the two-part study. So I like to have basically what I'm saying is I like to have a conversation.
Hmm.
Also, if they've never done cost segregation before and they've gotten multiple bids, then they don't know how to evaluate those bids, right? What to look for. So whether they do the study with me or not, I
Hmm.
help them understand what to look for because everybody's going to have their own criteria on how they decide on what firm to use.
Right.
So anyway, so I have an initial phone call, and if they're interested, well, and then I always want to make sure their CPA is involved, right?
Hmm.
I want to make sure that their CPA, if it's a competent CPA, says that they would recommend doing the study, then I want to talk about cost segregation and then get information from them so that my team and I can do the estimate. And
Hmm.
then from there, we provide the estimate that's going to show them two things that they're going to want to see. How much will it cost? And how much do we think they're going to get in accelerated depreciation, which will help them save so much on taxes?
Hmm.
And then if they want to move forward, then that's when they sign an engagement letter. and provide 50% of the fee, or they can pay in full, whatever they prefer. And then my firm does a physical inspection of the property
Hmm.
because we provide an audit defense up to a certain amount of hours at no cost. So we do the physical inspection where we take pictures, notes, and measurements that become part of the report so
Mhm.
that if the client's ever audited, we will be the ones to help them and their CPA answer any question about a report to the IRS agent. Also, the client's paying us to identify every single asset that can give them more depreciation. So without physically seeing the property, we would have no idea what's there. Once the physical inspection is done, then it typically takes 30 days to complete the report.
Okay.
Once we have the report ready once we have the report, we deliver it to them and their CPA, and we offer a complimentary call to have with the client and the CPA if they want it. You know, some CPAs are very familiar with cost segregation. They don't have any questions.
Right.
But if the client wants to go over the report so
Mhm.
that they know how to look at it, if they want to know how to read it, you know, then we could still do the call with the client. But you know, some clients, they just want their CPA to take care of it and they don't care about
Right.
the report. But once we deliver the report, if they've only put down a deposit, then the remainder, the balance is due at the time
Mhm.
of delivery. And to back up, we typically get that report done 30 days after the inspection. However, during tax time, if they need it sooner, we can definitely do it sooner than 30 days.
Okay. Now, in terms of documents and information that the client provides you, how deep does it go? Do you need to see blueprints? What kind of stuff do you need to see from the client side?
So if it's a recent acquisition, it's not on a tax return
Mhm.
or specifically a depreciation schedule, then what we need is a closing statement and an appraisal if they have one. If they don't have one, it's not necessary, but it's helpful for us to determine how much work is involved, right? Is it one building? What's the square footage? Now, if it's part of a 1031 exchange, then what we will request is the IRS Form 8824 showing the carry forward basis from that exchange. That's the number we need to determine uh, what the depreciable basis is going to be. So that's on a recent acquisition, on a property that's not on a tax return. Now, if it's on a property that is on a tax return, we're going to request the current depreciation schedule. So
Okay.
everyone's filed for 2023, hopefully. And so we would, for the client, for the people for the real estate investors that would like to know, that want to get an estimate,
Mhm.
then that's what I would be requesting is their 2023 federal depreciation schedule showing the real estate investment, right?
Okay.
Um, and if they have an appraisal, great. If they don't, it's not necessary. So those are the information that my team and I would need. Now,
Mhm.
if it's new construction, going back to what you mentioned
Yeah.
earlier, then the more details we have, the better. So in the commercial world, typically an AIA G 703 is used to keep track of all the expenses. So if they have that document, great, then that's what they will provide us. If they kept track of all the details in a different fashion, like on a spreadsheet,
Mhm.
then that's what they would send to us. So however they kept track, and hopefully good track
Yeah.
of the project, that's the information that we need. The more information we have up front, the better. And especially too, if we're going to do the report, those details are what we need to make sure that they're part of the report.
Okay.
This real estate investor that was referred to me, he got a new CPA who I
Mhm.
work with, and he recommended doing a cost segregation study. Well, this real estate investor gutted the building. Okay. And so I personally went to this property. And so when I walked inside, it's gutted,
Mhm.
right? You just see the four walls
Right.
and they're getting ready to do heavy renovation, right? So what you want to think about is, what are we going to find in 5-year and 15-year property, right? What am I going to find inside and what am I going to find outside? Because really, it's just a shell. So even though we almost got what we thought, my company's estimates are conservative,
Mhm.
even though we thought we might get him $1 million in accelerated depreciation, we
Yeah.
came right under at 981. But this just reflects the knowledge and expertise of my team. I mean,
Mhm.
if you know and go through the IRS's audit technique guide, and
Mhm.
you know every single component that the IRS says that you can put on a faster depreciation
Mhm.
schedule, that's the biggest reason why you'll see a drastic difference between the results of my firm and other firms, right?
Right.
And so, because there's certain things that that can be missed. Certain parts of the electrical and the plumbing can
Mhm.
be on a faster depreciation schedule. Well, you have to know that,
Yeah.
right? So, and then outside a commercial building, right? You're going to get the parking lot. What do
Right.
you have a parking lot? Wheel stops, bollards, signage, certain, for this building, they had a certain amount of landscaping. So, I mean, that's what we found. And so
Mhm.
our estimate said, we think we might get you $1 million over in accelerated depreciation or first year accelerated depreciation. So I think for my team to get right under $1 million, 981, I
Yeah.
think they did a pretty good job with what you just described, like an industrial space, right? Like, there wasn't, I mean, this was a warehouse that they were going to convert into offices
Yeah.
and it was actually a manufacturing company that is going to occupy this building. It's going to be an owner occupied building.
Yeah.
But even before they finished the renovation, we found quite a bit.
And
But does
that
that
was,
answer your question about the
yeah.
industrial space?
Well, so like besides plumbing, electrical, is it lighting, carpet that you're accelerating that are acceleratable, if I were to use that term?
Yeah, so definitely there's a certain amount of lighting in
Mhm.
that entire building, even outside the building that we're going to take a look at. Also, even though the way I'm describing it to you is that there's a shell,
Mhm.
well, even when they gutted it, there was a certain area where there was office space. So
Mhm.
that office space was still there. So, whether it's residential or commercial, that we're still we found, or I found, cabinets, countertops.
Mhm.
So even in that one area, there was still items that I found that could be depreciated faster.
So I guess it's like breaking down a building and then looking at things that might not last the whole useful life of the building portion, but can be front loaded. That's what it sounds like.
Right. So, I mean, these are the IRS's rules. And yes, that would be the background
Mhm.
on the items that they say could be on a faster depreciation schedule, like the carpet. Would that last that amount of time? Probably not. So that's, the IRS says that, that could be depreciated faster. Um, yeah. So it basically is showing items that are not going to last 27 and a half or 39 years.
Okay, okay, well then that's easy to remember, that's easier for people to digest. So thank you for that. How would you, I guess it's like, so for an industrial building, you're looking at office cabinets, so that would be a good candidate for cost segregation.
Oh, sure.
Okay,
Because it's not going to be just a building where you walk inside and there's not, different offices, different areas of that building where there's going to be, different spaces that are going to be used.
okay. Now, cost segregation seems to apply to the building itself and renovated portions of the building. Does it ever get applied to furniture, fixtures, equipment?
No, those are treated differently. So I got asked this question by a hotel owner that's a client of mine.
Mhm.
When he got the report, he said, "Hey, Geraldine, I don't see um, I don't see on the report anywhere where it it's called abbreviated as FF&E, furniture, fixtures, and equipment. And I told them the reason why is because that's not part of the building.
Mm, I see. So if you can lift it up and pick it up, it's not part of the cost segregation study.
Right. I mean, furniture, so a cost segregation study technically is separating the real property from the personal property.
Mm,
And so what you want to think of is the real property is anything permanently attached to the ground,
okay.
right? So you're going to be looking at the four walls, the roof, um, and personal property is what the IRS considers, uh, if you wanted to take it with you, you could. I mean,
Yeah.
would you take the carpet? No. Would
No.
you take
Right.
the cabinets? Maybe. I'd
Right.
take old cabinets to put in my garage to make it more organized, but that's how they view that. Now, to go back to furniture, you don't use furniture to construct the building, right?
Right.
Or the equipment that you place inside the building, right?
Yeah.
That's different if it's part of the building. But so for me, that's what I would think of as like a hotel. Yeah, you put furniture in there, but
Mhm.
you don't use the furniture to construct the building, right?
Right.
Same thing with, the equipment and the fixtures. Those are items that are treated separately because
Yeah.
they're not part of the building.
So it really is a distinction between personal property and real property. What's
Correct.
permanent and what you can pick up and take with you.
Right.
Okay, well that's really important. And then in those instances where uh, you're kind of the second opinion on a cost segregation study, what are some common mistakes that you've seen in other people's reports that you have caught on to, captured, whatever?
So a real estate investor that saw an online presentation of mine, um, she wanted my firm and I to do cost segregation studies on all the properties that she had acquired in that within a year.
Mhm.
And when I was working with her, she shared a cost segregation study done by another firm right before she met me. And when my team and I looked at this report, they only got her 13% that they moved into a faster depreciation schedule off of that building basis.
Mhm.
And so when my team and I looked at it, they missed a bunch of the electrical and the plumbing. Basically, my team would have gotten her 33%
Oh, wow.
that we would have moved into a faster depreciation schedule. On average, because recently she was telling the story to multiple real estate investors at this conference,
Mhm.
saying that all cost segregation reports are not, the same.
Yeah.
So uh, basically, that goes back to what I mentioned earlier, that it all depends on your knowledge and expertise. In my company's report, it's detailed. You are going to see a breakdown of every single component that is in that building.
Mhm.
And so, and also, my company will cite court cases that will tell the IRS why we say certain assets can be on
Mhm.
a faster depreciation schedule. Other firms, it's not a detailed report. A lot of times it's one page, it's 2 pages. There is no breakdown. They just give you totals of different categories. So it really depends on, I think, your knowledge and expertise on what you think can be on a faster depreciation schedule. And
Mhm.
it shows in firms' reports.
Right. So it seems like Specialty Tax Group is much more thorough. The documentation is there, and your calculations, the cost segregation study, you can defend it with the IRS. Am I right?
Right. To give you background on my company and my team, the founder of Specialty Tax Group has an extensive background in cost segregation.
Mm.
He's worked for two different large accounting firms that have their own cost segregation group.
Yeah.
So he definitely has an extensive background in cost segregation. Also, there is a group called the American Society of Cost Segregation Professionals. Well,
Mhm.
the founder of my company is on the board, and the engineers on my team are certified through that group. So that their knowledge and expertise is reflected in the results we get for our clients.
Great. Now let's pivot a little. Let's talk about you. So, when you were a little girl or in high school, college, like what were you thinking about where you would end up career-wise, and how is that? Were there signposts on the road that told you were going to be in cost segregation?
No, there were no signposts. I grew up with my mother being successful at selling life insurance for one insurance company. Both my parents are from the Philippines.
Mm-hmm.
The way they came over here to the States is my dad joined the US Navy in the Philippines.
Oh, wow.
So they moved. My dad got stationed at got stationed at different bases here in the US.
Mm-hmm.
And so when my dad got close to retirement, my godparents introduced my mom to the life insurance industry.
Mm.
Well, the reason why my mom did so well is because she targeted the Filipino community.
Oh,
So that's
wow.
why she did so well. And I remember when I was growing up, I was thinking, I'm never going to do what my mother does. I don't want to be in the life insurance industry. Um, and but what happened is, because the Filipino community is so family oriented, she would take me and my two older sisters with her to
Oh,
these
these
events.
presentations.
I am passionate about cost segregation in the specialty tax world. And so, but what I did learn from my mom as I grew up is I learned how to, uh, that's how I learned how to sell,
Mm-hmm.
how to, um, where to, how to find the client,
Mm-hmm.
and how to have the conversation and how to get the referrals. So I learned from her.
Mm-hmm.
But one of the biggest pieces when I was in the life insurance industry is I heard the VP of an insurance company say he could give you all the product knowledge he can, but what he can't teach you is how to be likable.
Mm.
People have to like you, right?
Right.
People buy you, not necessarily the product or the company. So that's why I love what I do as far as working with the people, because I like being able to have a conversation with them
Yeah.
and making sure that they understand what cost segregation is and how it can help them, right? I'm not just sending a quote.
Mhm.
And so, but that's what I was lucky and fortunate to have a mom that I could watch to see how she grew her business, where not only did she have, I think it was over 60,000 policies at one point in
Oh,
time.
wow.
And then also in her prime, she had 1,000 agents under her.
Oh my gosh.
So she did extremely well for herself.
Mhm.
So I was fortunate enough to, grow up and watch her grow her business and be successful at it.
That's amazing. Well, that explains a lot why you're such a rock star in front of people. We're so happy to host you for our first Lunch and Learn as a platinum sponsor. And then also for our CI course, when you came to talk to the students, they had endless amount of questions. What we were expecting to be a 5-minute talk turned into a 25-minute talk. And it was so clear that you know your material, you know the industry, you know what you're talking about, but you can also break it down into layman's terms. So I thank you for that. I think that's is one of the things that sets you apart.
Thank you, Jamie. I'm glad to get that feedback because I don't know what the audience is thinking. But thank you, Jamie.
Yeah, so kudos to you. So looking ahead, your goal of the year is almost over.
Well, so with Specialty Tax Group, what they focus on is getting in front of as many CPAs as they can,
Mhm.
because besides cost segregation, we offer assistance with another tax deduction and
Mm.
other tax credits. So, there's a lot of firms out there that only assist with cost segregation
Yeah.
or cost segregation and the research and development tax credit.
Mhm.
But we offer so much assistance with another deduction and other tax credits. So that's why we want to make sure we get in front of as many CPAs as we can so
Yeah.
we can help them and their clients. So my goal for 2025 is to meet as many CPAs as I can so that I can help them and their clients because my firm, Specialty Tax Group, is unique in that way. I haven't met another firm that offers so much assistance with so many credits and another tax deduction.
Well, I think everybody that you've spoken to in our SoCal CCIM chapter has been armed with new information that can help their clients take advantage in the marketplace, take advantage of accumulated depreciation, accelerated. I think what was so great about one of your recent LinkedIn posts is accelerate before you depreciate. I thought that was awesome.
Yeah. I the reason why I came up with that is at a conference, I always want to make sure I get remembered or I stand out.
Yeah, no, it's
So
catchy and simple and easy to remember. And I think it's also very compelling. So kudos to you. I'm looking to get a t-shirt with that statement on it one day.
yeah, I'll definitely get you one, Jamie.
Great, great. And then, if you could give advice to your younger self, what are some things you would have told your younger self, knowing what you know now?
Ah, my younger self. You know, to answer that question, the a banker that I know, when we were talking about the best sales advice we've ever received, she had told me someone told her that you want to be the it girl. And she explained to me that what that meant is you want to be the person that people will think either they'll think of me and think I know the answer.
Mhm.
I know how to find the answer. I know someone who knows the answer, or I know where to get the answer.
I think people feeling comfortable to reach out, I think that's the key because when people feel comfortable to reach out, then you can get into a conversation about cost segregation or whatever your business is. But the fact that they think of you, I think is like tremendous.
Yeah. So that's what I want to be remembered. So I definitely tell people that I want them to view me as a resource and that
Mhm.
if they have any questions about anything, if I can help, I will.
Yeah. And I like the fact that, even if they don't qualify for cost segregation, at least you can point them to a competent CPA or, whatever other needs that they may have. So I just love that about you. So thank you. Okay, now Geraldine, let's say we're doing a why you should sponsor SoCal CCIM. Can you kind of tell the story about how you started off in NorCal and then somehow you ended up connecting with SoCal and NorCal asked you, why are you always down there?
So the reason why I looked into being a sponsor, not necessarily a platinum sponsor with SoCal CCIM, is there was a rep on my team that was going to be in Southern California a lot because he has family there. And he told me that he wanted to focus on SoCal CCIM to see if he could do business with the members. I
Mhm.
said, great. Well, unfortunately, um, this rep didn't take advantage of the opportunity that was that that we got through SoCal CCIM. So what ended up happening is I found out what the opportunity is by being a sponsor and being a platinum sponsor. So I decided, I talked to my company and said, I think this is an amazing opportunity. So when I learned about the opportunity with SoCal CCIM, it's like when I was sharing with you about cost segregation. It's a no-brainer for the amount
Yeah.
of money you spend with the amount of benefits you receive. Why would you not be a platinum sponsor? So it's been great. And compared to other chapters, this is not what you would get with their sponsorship. I am proud, my company and I are proud to be sponsors of NorCal CCIM, but we're
Mhm.
not platinum sponsors. We're, I believe, bronze. And also, and this gives kudos to you, Jamie. One of a past president, Tim V. Tran,
Mhm.
is great. And, and he's a great leader. When he was president, he would always make it a point to acknowledge the sponsors, give
Mhm.
them, let them introduce themselves versus, just the company logo being on the screen. And
Right.
also, what was great about Tim, he actually did business, I believe, with every single sponsor. Because
Mm.
when he introduced them, he would say, I did business with them, I sent
Right.
business their way. But I got to do an in-person presentation twice in
Mhm.
multiple years that my company and I have been a sponsor for NorCal CCIM. But it wasn't a given, right? Like it was because members had asked for me to give a presentation.
Mhm.
But with SoCal CCIM, it's part of the sponsorship.
Right.
So, I mean, that's huge. And um, also, Jamie, being working with you while being a platinum sponsor, I think you've done a great job, an amazing job making sure that the sponsors get the benefit. And I feel like even though you're not the current president, you might as well be, because I feel like you're so involved with SoCal CCIM chapter, the sponsors and the members.
Yeah.
Um, so I feel like between you and the benefits that you receive, especially with the
Mhm.
platinum sponsorship, I mean, it's been great. I mean, even before that in-person presentation,
Mhm.
I already got a referral through you,
Yeah.
and I definitely got referrals from the presentation and
Mhm.
afterwards. Uh,
Mm.
so people in the Northern California CCIM chapter have been asking me, Geraldine, you live and work here in the Bay Area. Why are you going to SoCal like every other week? And I'm like, well, oh, and you've been doing a great job, Jamie, with the in-person events. I'm like, well, there's an event and Jamie's going to be there. And,
Right.
the people that I have met are going to be there. So it's been great being involved with the Southern California chapter.
Well, that's great to hear. I think when I came on board and joined as a board member, I looked around and I was like, what are we doing for the sponsors? What kind of value are we providing? So our chapter admin, Louisa Higgins, and I worked on the sponsorship package, and I was like, you know what? We essentially are the marketing arm for sponsors to give them exposure, to allow you kind of a platform to tell your story. And I thought, what better way except lunch and learn? I love food, I'm a foodie. So doing a lunch and learn or an afternoon presentation, and then having a permanent record that maybe you could link our YouTube to any new client, conversation. And having a podcast is really revealing. It kind of gives a full spectrum look at you. And then having a webinar, I think what you did for our CI 104 students, if you could replicate that on a webinar, that would be so powerful for all of us, and even beyond SoCal CCIM. I think it's a great permanent record to have. And I just love the fact that we were able to uplift and expand your exposure to our community, so it was exciting for me. And I'm glad that we were able to get to be friends and to meet at this juncture. It really has been a blessing to know you.
Yeah, well, and I feel the same way about you, Jamie. I also want to add, because whoever's going to watch this, I want them to know, to give examples of how you've been so involved and creative with this chapter. You give the sponsors the opportunity to meet and greet the attendees at the events. I haven't been asked to do that with other chapters.
Oh, wow.
The sponsors are able to meet all the attendees. They
Right.
actually meet and greet the people that are going to be at that event. Also, um, you do a great job of having events where, like, when you had the event at the Mission Viejo,
Mhm.
you were
Rancho
out,
Mission Viejo, the
yeah,
sponsor appreciation lunch.
my company and I have been a sponsor for multiple years. So I mean, so
Yeah.
that's great, because the goodie bags that you made sure that the sponsors came home with,
Mhm.
I mean, it was great. It made me, again, that's just another example of
Mhm.
how it's been great to be a platinum sponsor. And then also, um, there was something else that you did. Anyways, oh, and it's great that you want the sponsors involved in the sense that you want their feedback and
Mhm.
you want their ideals of what the chapter can do for the sponsors or
Mhm.
have their input on any of the different different things that are going on with the chapter. Like
Right.
it's been great that you wanted us to be involved for the 2025 planning,
Mhm.
so I think it's great that you are so involved and you get the members and the sponsors involved with the chapter. I feel like you've made it so dynamic and so fun to be part of this chapter.
Thank you so much. Because my whole thing is there's a lot of wisdom in the room. There's a lot of wisdom with our sponsors. I mean, you guys know your specific area much deeper than me. And I'm like, let's tap into that. And I just love the fact that you guys have been so supportive, always willing to help me whenever needed. And it's just been a great collaboration. So, I'm really proud of what we achieved in the last 6 months. And it's been a joyride for me for the most part.
Well, I hope and I'm sure that SoCal CCIM knows what a valuable asset you are to them. Like I don't know if I said this earlier, but you are a big reason why my company and I are not just a sponsor, but we're a platinum sponsor for SoCal CCIM. And if as long as you're involved, we would love to continue being a sponsor
Mm.
as long, under your leadership, because
Right.
it's been such joy, being a sponsor with you being heavily involved with this group.
Great. Well, thank you so much for the feedback, Geraldine. I really loved getting to know you this year, and I hope our friendship is enduring and blossoms and grows. And I want to see you reach your finish line, and I want you to be there at my first ribbon cutting when I develop my own buildings. So thank you very much for taking a chance on us.
Oh, absolutely. I'm so glad that my company and I did. Well, thank you for having me on this podcast, Jamie.
Yeah.
I want you to know that you're a big reason why my company and I became a platinum sponsor with Southern California CCIM.
Thank
It's
you, Geraldine. That
been,
that means a lot. Well, besides that, would you like to tell the audience any thoughts for farewell?
if you have any questions about cost segregation, want more information, you want a complimentary estimate, please feel free to call or email me.
Okay. Okay, sounds good. Well, thank you for being on the show. This was an exciting episode, very eye-opening, and a deep dive into cost segregation. So thank you so much, Geraldine. I wish you nothing but the best.
Thanks, Jamie.